In this video, I would like to actually continue the topic from the last video, or in other words, taking profits. So, although some people like to think about what went wrong, start analyzing situations, how to improve for the next time, I really appreciate that way of thinking, but I think there is a better way of thinking, and it is if you have taken a profitable trade, it will be better to actually come back and analyze what have happened right in this trade, what you could have improved and even made a better trade. And this way of thinking, actually, I borrowed from a book from the famous chess player Garry Kasparov, and that's one of the things he was saying there. That's the most important thing that helped him to become such a great chess player was actually not analyzing what went wrong and why he lost a certain game, but when after he had a winning streak, or certain number of games that he won one after another, he came back to and analyzed each and every move on the chessboard, and what he could have done better, and how he could have improved his game. So based on that and looking at this chart, I shared with my followers on Colibri Trader on the 10th of March that there was a potential setup that the euro dollar was forming on the daily chart. There was an inside bar on a support level, and you can go to my website and check this post from the 10th of March. But what is more crucial here is that this is a screenshot a few days later. There was a demand, a small demand area here as well, which was just above a larger demand area. So a potential scenario was the price to either go lower or continue raising higher, and then this scenario was confirmed from the 4-hour chart. So basically I took a long trade, and now I'm still in this trade. So just to come back to the original topic, how and where am I expecting to take profits, and because I would like to actually use a real example of that. That's why I'm using this particular trade. It's what I'll be looking for is first how the price will be reacting at the major levels. And our first resistance area is around the level of 1.1400, which is this little peak here, and then the next one would be the psychological level of 1.1500, which is actually my target. So what I'll be doing is I will wait for the price to go to the first resistance area, or 1.1400, and then I will look for any sort of price rejection on the daily time frame. I won't be looking at price rejections on the 4-hour time frame. I'll only consider the daily time frame for the major excuse me, the major signals and the major take profit areas. Then I'll also consider if I'm about to exit my trade before my target has been hit. I'll consider how far is a major supply or demand area. In this case, how far is this supply area here? So let's say if I'm about to take my money off the table at 1.1400, then the supply area is only 100 pips away. So is it reasonable to wait for another 100 pips or just take my profits off the table? Maybe it is. And I'll also look into the risk reward ratio. I'm trying to achieve at least 1 to 2 risk to reward ratio, and apparently with supply and demand those ratios might be much higher. But in this case, I will first check how the price is reacting around the level of 1.1400 here, the first resistance area, and then possibly wait if there is no rejections. So I'll possibly wait for the price to reach to the supply area and then decide to take my position off or not. Because imagine that I have this target in mind. I want to make X amount of money or X amount of pips, and then I'm waiting for the price to reach a certain level. But then if it reaches this level and it doesn't show a sign of deceleration or people taking off money from this trade, but let's say there is a huge green candle here that pierces through the supply area, am I going to take my profits? Well, apparently not, because what happens after this green candle is crucial. So if we have an inside bar somewhere here, it will be a perfect entry scenario for a short trade, and in my case I would just take off the money from this trade. But if, let's say, we have a bearish rejection, then price continues climbing higher above the supply area, we might experience actually a major reversal and a breakout above this supply zone. So there is not much of a reason to take money off the table or close your trade if the daily chart is not confirming that scenario. So I will just leave my trade open until I see some warning signs that the trend might be to an end or to a minor correction, and this will come again from the daily chart, guys. So I'll be looking for a level on the daily chart that is another resistance area, and I'll see how price reacts around this level. So it's actually not that complicated if you think about it. You just need to pinpoint the major areas and just wait for the price action to either confirm or reject those areas.